Good morning traders, I'm James Harte and welcome to this Orbex Market Insights video on Wednesday, August 14th for the metals and energy markets, where we will be focusing on gold and crude oil. So it's been a particularly interesting time for both instruments then, given the recent developments which have rocked the market. Gold has been driven sharply higher over the last week in the wake of the escalating trade tensions between the US and China. News of a fresh set of US tariffs on Chinese goods, along with subsequent devaluing of the Chinese yuan, sent gold prices soaring above the 1522.75 level this week. However, gold was only briefly above that level before we then saw a sharp reversal lower yesterday in response to news that President Trump has now decided that the tariffs due to start on September 1st will only be applied to a restricted number of goods for now, while the others will be delayed until December 15th. The US Trade Representative released a statement yesterday saying that the US is delaying imposing tariffs on some imports from China until the 15th of December because of health, safety, national security, and other factors. The products include mobile phones, laptops, video game consoles, some toys, computer monitors, and certain footwear and clothing. Now, the market has reacted strongly to the news, with gold prices coming off sharply and oil prices surging higher. The news is being interpreted as a sign that the US-China trade talks are not dead yet, and with some of the tariffs being postponed, there is a hope that negotiations in September could lead to the tariffs being cancelled and the two sides working towards delivering a deal once again. Okay, so let's take a look at some technicals now then, and please remember, opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So, starting with gold on the daily chart, you can see that price recently broke out above the 1452.05 level, traded all the way up to pierce above that 1522.75 level before reversing. Now, this 1522.75 level is a major long-term level in gold, having been the 2012 and mid-2011 lows. Indeed, the level has not been retested since it was broken in 2013. And as you can see, this first test has given a violent reaction lower. Now, given the extent of the recent rally in gold, and you can see with the RSI indicator flagging up bearish divergence, some retracement here is not unlikely. However, while we remain above this 1452.05 level, further upside remains the focus in the near term. Now, if we drop down onto the H4 chart then, and you can see the extent of that breakdown yesterday, the reversal in gold, you can see we painted this large bearish engulfing candle on the 4-hour chart. So, if we see a break of the candle lows then around 1480.17, this could indeed open up the run for a deeper test down to that 1452.05 level. As I say though, while we remain above that level, then further upside is likely in the near term. And again, this 1522.75 level remains the key upside marker to watch. Now, moving over to the oil chart then and starting on the daily, and you can see again the large rally yesterday in response to that US-China news. So oil has been rallying firmly off the 50.73 lows which were tested last week. You can see we printed a large double bottom here, and we've had 4 consecutive bullish daily candles since then. We're currently challenging the bearish trend line from the July highs here. You can see the July highs and the August highs. So we're currently challenging that level around 57.15 currently, and just above here you can see we have further resistance at the 57.66 level. So for now, given the extent of this recovery, further upside is likely. If we drop down onto the H4 chart, again you can see the scale of that move up yesterday in response to the US-China trade news. So if we do stall here for now, again, we'll be looking for price to hold above that 56.10 level. If we test deeper than that, we have support just below there at the 54.93 level. So while we remain above these highs, focus is on a continued push higher, and the key level to watch to the top side in oil will be a break of that 58.93 zone. Okay, so these are the levels I'm looking at in gold and oil over today and the remainder of the week. Please make sure to stay tuned into the blog, where we will update you on all important trading developments as they come in, doing our best as always to serve traders responsibly. Okay, thanks for tuning in. Good luck with your trading. Goodbye.